Hello and welcome. You're watching Markets at Noon. I'm Kavita Thapliyar. With me is Mansi Dave and Ankur Mishra. And today, once again, market is trying to recover, hold on to its very important levels. But yeah, no success so far. Looking at the market breadth, it is still in the favors of decline. And again, a very specific action and basically dominated by earnings season entirely, Mansi.
Week after week, Kavita, as we see the markets are showing signs of negativity. In fact, our dear producer was also saying the same thing, that I'm tired of these words: lackluster, flat, range-bound, volatile. And as you see, 24,800 at present, red pattern in Nifty. Benchmarks, be it the broader markets, we see signs on absolute volatility. Not that the markets don't try to recover. In the first half also, we did see the market attempting recovery. But the signs of negativity are more drastic as we see than the recovery. Bank Nifty also showing signs of negativity at present. The broader markets, mid cap and small cap, yet another week where we see weak start for the broader markets. A few players in the consumption bucket which are trying to help the markets, and the pharma playing the role of the defensives, but then there are larger names which are not helping the markets. If you see banks and financials, Kotak Mahindra Bank, Axis Bank, all of them are showing signs of downtrends. We see downsurge in Bharti Airtel, TCS. Major IT players have left the game since long, as we clearly see. And at present, if you see, it's pharma, FMCG, automobile and energy, which is trying to help the market to some extent. But that help is quite less, because on the flip side, you see the PSU bank space, IT, metal, real estate, all of these spaces not really performing in the market. So an absolute weak start at present. A choppy day for trade on the Dalal Street. Broader markets are mirroring the benchmarks. Realty, metal losing the shine. Pharma playing the role of the defensive. Let us just expect that the FMCG bucket also helps the market, just like the pharma. Ankur, we clearly see volatility and down surges in the market at present.
Definitely a downsurge is there, but one thing I want to draw attention, both of you must have seen the ongoing test match series in England. We defended well. If you talk about series, yes, we are down 2-1, but look at the grit, determination and the confidence which has been shown by Ravindra Jadeja as well as Washington Sundar. Similarly, the same parallel I can draw for the market. 24,800 well protected as of now. Yes, efforts are being made towards marching towards 25,000. And to decode the market, we have with us Rajesh Bhosale, technical analyst, Angel One. Mr. Bhosale, did you happen to see the test match I was talking about, and is there any parallel with market?
Yes, I did saw the match. It was very interesting, and kudos to Washington and Jadeja. They helped to draw the match. So significant match. So we still have a chance to draw the series. And if we see Nifty, so FMCG and some defensive space, pharma space are helping market to hold on to the key levels. But if we see the heavyweights, they are not supporting. In fact, if we see on the technical front, last week, we saw a major breakdown on the Nifty charts. A rising channel pattern as well as 50 EMA has been broken down. So as long we don't surpass 25,000, markets are likely to remain under pressure. And on the downside, 24,600 is the key 89 EMA. So in the near term, we expect Nifty to consolidate within a range of 24,600 and 25,000 zone.
Absolutely. So Ankur, you did find a blessing in disguise in this market also. And yes, you are right. No, the Indian team altogether did see a real good spirit. But when we talk about Jadeja, yes, Sir Jadeja joined Sir Gary Sobers is what they all say, because around 60 years record which has been breaked of not just break, but we have reached, at least Jadeja has reached the record of Gary Sobers. So yes, real good performance, and the cricket lovers are really enjoying the match at least. But having said so, Rajesh, yes, we don't see that sound of spirit in the market at present, but then it's a stock because market, of course, because we are in the result earning season midway through, but the results are also not really showing the signs of positivity the way they should. But what are the stocks on your radar right now?
Yeah, so some counters are definitely showing relative strength, and they are still trading around its 52-week high or all-time high. So some of those counter can continue to perform despite a lackluster market. And one of the pick is PEL, Piramal Enterprises. So if we see PEL had a strong run during the start of July month. It rallied from the levels of 1150 to 1350, and then last week we saw some price correction. Today the stock is showing strength around its 20 EMA and has already crossed its Friday's high. So we are bullish on this counter and we recommend a buy with a stop loss of 1260. We expect a target of 1410. The second buy call is on HDFC Life. So HDFC Life, if we see on the monthly chart, the stock has already given a strong long-term breakout. And last week, after some correction, it has formed a bullish engulfing pattern. This week, we are seeing a follow-up buying in HDFC Life, and it has also crossed about 20 EMA. So we expect HDFC Life to resume its positive momentum. So with a small stop loss of 750, we expect a upside target of 805.
All right, so Rajesh, as far as your picks are concerned, a buy call in Piramal Enterprises and target 1410, and HDFC Life again a buy call, target 805. Thank you so much for taking time out and helping our viewers strategize their moves in the market today.